Time for hot picks, and there's a common theme. All three companies are involved in potash, the fertilizer. Our guest star pick is K&S, a German potash producer with assets in Canada and Western Europe. We're joined by Taylor Mckenna, analyst at Kopernik Global Investors. Taylor, thank you very much indeed for joining us.
Thank you, Andrew, for having me today.
Start off with K+S, please. Why should investors, do you think, take a look at this one?
Sure. As I get into it, let's take just a quick step back first and talk about potash. So potash is a key input into the global farming, and we need it to have the food that we eat on a daily basis. And we like to buy these things when they're below incentive price. And currently, potash is well below incentive price. So we have incentive price north of $500, and with potash at around $350 today, we see incredible upside in companies like K+S and even Nutrien. So K+S is in the mid part of the cost curve. So they're about break even today. And any uplift in potash prices as they move towards incentive price give the company a lot of operating leverage and great optionality. They have incredibly long mine lives. And of course, as these things move towards incentive price over time, we expect it to do quite well. As I get into my second pick, Nutrien, which is from Canada, right in your backyard, they're the global leader in potash. They have the best assets in the industry, and while they have a little less upside than K+S, we also really like that company as well.
And can we just loop back to K+S? So they opened the Bethune mine near Moose Jaw, Saskatchewan, and they say it's a solution potash mine. Does that change the economics of producing the mineral?
It doesn't change the economics that much. By solution mine, they're essentially pulling brine or water out of the ground and then extracting the potash from that, as opposed to pulling out dirt. It can be lower cost at times, and it is that mine in particular for K+S is on the low part of the cost curve, and it's performed very well recently. They're also going to increase production slightly there over the next few years.
Looping back to Nutrien, of course, they're very diversified. Potash is a major part of their business, but are there any other reasons why you'd be attracted to NTR?
Well, potash is the main reason. They have the best assets in the industry. They also have a very good nitrogen business, but they've talked about spinning that out or selling that. So that is a far less part of our value within Nutrien. But the other thing I think that's important is they have a global distribution network where they can sell all of these things across the world, actually, but particularly in North America and South America. So they have some assets that are not replaceable, but again, potash is the key one.
And then finally, BHP. And of course, they are ramping up in potash with their gigantic mine in Saskatchewan. It has been hit with huge cost overruns. And of course, potash, it's a major investment for them, but they're in other minerals in a big way.
They are, and I think here we're a value investor, so we take what the market gives us. We've, for a long time, been very heavy in precious metals, particularly gold and platinum. We still like them from a fundamental perspective, but so does the market. And we've harvested some gains there and moved into these large diversified miners, including BHP, which is really the largest copper producer in the world, has a great endowment around the world. You mentioned potash, which they also have. They also have great iron ore assets and really a hidden gem in Olympic Dam, which is a polymetallic deposit. So we really like BHP at these levels, but we would also include Vale, which is the largest iron ore producer and has the best mines, and also Glencore, which of course has been in the news a lot recently.
We've only about 30 seconds. Could I just loop back to a term you used there, incentive price? What do you mean by that in the context of a potash producer?
Sure. Great question. So what we mean is, what price does the market need, or do companies need to build a new large mine, right? And actually, Nutrien discloses this in their presentations. They think that price is north of $500. So absent $500 or above, you won't see any new large mine built. We like buying these things in those situations because supply is almost capped and demand continues to grow.
And where is the price now, roughly, of potash?
Around 350.
Oh, wow. So according to Nutrien, anyway, we're a long way from encouraging new capacity. Thank you very much indeed, Taylor. Really appreciate it.
Thank you so much for having me.
Taylor Mckenna, analyst at Kopernik Global Investors.